Thank you, yes, and welcome all of you to our offices here at Bloomberg in Sydney. So, as I've said, we've had the introduction, I'm from Bloomberg Intelligence, and that's Bloomberg's research arm. We have a team of 400 of us globally that is covering the equity markets, the associated industries, including mining, as well as fixed income, currency, commodities, and economics. The way our service works, it is a a complimentary service available to the subscribers of the Bloomberg terminal. So if you're subscribers and you'd like to access more of our research, or you'd like to explore how to access that through subscriptions, please contact one of our Bloomberg representatives after the presentation. In terms of the lithium prices, we all know since the end of the year we've had these large declines in both the price of lithium chemicals and also in the spodumene price, so the hard rock that many of the miners produce. So we've looked at about halving of the hydroxide price, which is that white line, a key chemical used for battery production, and particularly for electric vehicles. And we've had about a third decline on the spodumene price, the 6%, which is the one that is benchmarked for many of the Australian producers. And the reason for this primarily is that there are major concerns over all the supply that's come online. So we all know that there's a very strong case for electrification and vehicles to create massive long-term battery demand. I think that's without doubt. But the response to that has been some big increase in supply, and that is where some of the concerns have come from over surpluses in the immediate term at least. That's this chart here. So these are some numbers. Many of these numbers are from Wood Mackenzie. And we can see if we look in 2020 to 2022, the blue line exceeding the orange line, meaning demand deficits, has now in 2023 moved to surplus because of that large bump coming from the big producers. A lot of that is the Australian producers, your IGOs and your Pilbara Minerals, for example, who've added a lot of spodumene supply. Now, what will happen is that over the next few years, the massive ramp up in demand, that blue line, should cause things to normalise. And in fact, you should eventually end up back in a deficit by 2026. We also think that these assumptions around price are actually potentially a bit conservative because of some of the factors here, which I'll outline. One in terms of how the cost curves look over that period, but also some of the good signs of demand that we're seeing out of China. So this is a hydroxide. There is another one for carbonate, but I'm going to focus on a hydroxide because it is the key chemical used for battery production. And you can see with the blue and the orange line, this is the spodumene production that we talked about. So this is really where the Australian miners come in. What you can see on the far right-hand side of the curve here is the brine and carbonate production. That's a lot of that's coming offshore. The key thing to note when you're looking at this chart is that, and this is out to 2025, that the marginal price is generally set by, the price is generally set by the marginal production, which is going to be at the more expensive brine and carbonate rather than the spodumene producers. And what that means is that because mining for lithium tends to be less expensive, those producers should be able to secure pretty strong margins regardless of what happens with that far right end. So obviously it's a challenge, as we saw in the previous slide, with that extra production coming on. But the good news for these Australian producers is that they are producing at the low end of costs. Okay, so now I'm just going to switch over to the demand side. And this is where, in the near term, we are seeing some more positive signs. So there was a big drop off in demand in January. Part of that's seasonal, part of that's other factors. But we have seen in February and March an increase in EV sales. This EV sales are the majority of lithium demand. And you can see that around 2/3 of the demand is from China. The blue bar there is China demand, and the rest is from North America, Europe, and other countries. Now, where this demand is coming from is that we are starting to see some positive signs. Our auto analyst, Asia-Pac auto analyst, is forecasting a big increase in 2023 of vehicle demand out of China. A couple of reasons. Obviously the reopening is leading to some economic growth, and they are retaining the incentives around tax, and there are some new models coming out. So there is a bit of optimism that we could see an increase or a continuation of the demand recovery, which I think would be a positive sign and may not necessarily be fully priced into those demand assumptions that we're seeing right now. And now this was the long-term slide. So I guess this one comes down to more of the big picture for lithium. Yes, we are certainly experiencing a short-term period of consolidation in the price as that new supply comes online. But this is the long-term demand picture as outlined by what is required for electrification and what is basically being implied by the policy approaches from most major governments. And that is, so you can see 2022, we're right on the left-hand side. That 2050 represents a 540% increase in the demand for lithium. The majority of that is from electric vehicle batteries. So really, this will depend on the continued trend that we're seeing of electrification, requirement for electric vehicles, and generally the take-up of that as a method of transportation. This does assume that around 3/4 of vehicles become electric vehicles by around the mid-2030s. And then from then on, that plateaus there at around the 75% mark, with the remainder being ICE, internal combustion engine vehicles. So that's the overall presentation, very concise. Obviously, forecasting prices is fraud, as we all know, but hopefully a few things to think about as some of the scenarios that could play out over the next couple of years. If you have any further questions about our service or our presentation, or what's successful in the Bloomberg terminal, please contact one of our Bloomberg representatives who should be here for the preso. Thanks very much.
Afternoon. It's a pleasure to be here to present on behalf of Liontown. Let me just advance the slides. This is an important slide, so you know the basis on which this presentation is prepared. And let me start. Many of you will know who Liontown is, but for those who don't, we're an emerging lithium producer with two flagship assets. One is Kathleen Valley, and the other is Buldania. We have a market cap of around $6 billion, and we're partway through construction of Kathleen Valley, which we hope to bring online with first production in mid-2024. Being located in Western Australia is a significant advantage, particularly in today's market and particularly in lithium. Australia supply will qualify for both US IRA and EU Critical Minerals Act subsidies, which gives our customers access to subsidies and funding which they can't get with some competitors' product. And that puts them in a competitive advantage with their cars. The political stability of Western Australia also provides a supportive backdrop for the development of assets, with significant investment being made by Liontown and its shareholders of just under 900 million Australian dollars. And we may take this for granted in Australia, but we can see from jurisdictions around the world this is not necessarily an easy thing. And we're actually seeing it demonstrated to us that the political uncertainty in other jurisdictions only adds to the anxiety over supply. Amongst Australian lithium deposits, our Kathleen Valley mine is up there, among the best of them. Having a resource of this scale provides longevity and scalability, which are precisely the characteristics required to support downstream conversion. It also creates immense optionality into the future, which is essential in the commodities industry, and especially in the face of significant growth, as was outlined in the previous presentation, and the uncertainty that that brings. Let me give you a bit of an update on where we are with construction. Since the first blast was fired at the tail end of January, which is only 3 months ago, the progress on site has been monumental. As you can see, we've moved a lot of material. So there's a picture of one of the open pits there, Mount Man. And we are also stockpiling material which we hope to sell as DSO in the future, and we're advancing commercial discussions on that. You can also see significant progress on associated infrastructure. Our SAG mill is now on site, and we've got a picture there. And actually some of our shareholders actually went down to the port of Fremantle and took pictures of it before we even knew it was in the country, which is quite impressive. And we're pouring the concrete to support the installation. Our dragonfly accommodation village, as you can see here in the shape of a dragonfly, is pretty unique. And this was done with a very clear nod to the Joao people, whose country we operate on. And this is part of their Dreamtime story about the Jones Creek, which actually sits quite close to our mine site. While pictures are good, I've actually tried to embed a video, so if this actually works, we can hopefully get a little bit of a flyover of the mine site and the different pieces of work that's all going. I think it's quite impressive to see. I mean, I'm not a mining guy per se, but to see all of that development done in just 3 months is quite impressive. The team is really pulling out all the stops to try and build this as fast as we possibly can to meet first production by the middle of next year. Our original mine plan had an expansion to around 700,000 tonnes of spodumene in 2029, which is equivalent to the 4 million tonnes of throughput that you see here on the slide. But we're exploring opportunities to try and advance that, to bring it forward, to capture some more of that near-term high prices. This expansion could significantly increase our production in a market short of tonnes, as well as coming online at a time which complements our existing offtake agreements that we have with LG Energy Solutions, Tesla and Ford, who are taking the majority of the production from our first stage, which will be around 500,000 tonnes or more. This expansion could also provide the initial feed to supply our first train of lithium refining. Any advance in mine expansion also provides an opportunity to accelerate the original plan to enter the downstream. As you can see from these charts, integration provides a smoother cash flow profile through the cycle, as the profitability can often ebb and flow between miner and refiner, depending on the industry backdrop at the time. Integrated production remains profitable at either point in the commodities cycle, and we saw on the earlier chart from Bloomberg Intelligence they were on the left of the cost curve. This is one of the underlying rationales behind integration in other industries such as bauxite and alumina. As a result of greater EBITDA stability, integrated producers often experience re-rating. You can see on the right-hand side here, integrated producers trade on higher multiples than producers in today's market, even at higher spodumene prices. Before I wrap up and go to questions, let me touch briefly on our Baldania asset, which is located in the heart of the South Kalgoorlie Lithium District. As you can see, there are a number of interesting lithium deposits in this district, which could provide logistics and infrastructure advantages over pursuing individual developments in isolation. And we are continuing our work here to improve on the definition of the resource, as well as continuing to explore in the northwest area, working towards a mineral resource update later in the year. And with that, I'll move to Q&A.
Any questions from the audience, please raise your hand and I'll bring around the microphone.
Are you intending to development phase in the Baldania? Because you are focusing on Kathleen Valley at this moment.
Yep. So what we're doing at Baldania right now is continuing the drilling so that we can see if there's more resource there, because at the moment it's 15 million tons of around 1%. We think there's more prospectivity and that there's an active drill program going on in the northwest area to try and further define that resource. But absolutely the plan is to come up with a development pathway for Baldania, which may not be the same as Kathleen Valley given the smaller resource, but that's absolutely something we're trying to do right now as a company.
Lawrence?
Lawrence just with respect to the development, in terms of the flexibility that you've got to mine, is it a set and forget mine plan because of the volatility of the lithium price, or is it that you can meet the market with different grades from the different pits? I'm just wondering if you've got flexibility over the mine life over the next, say, 4 or 5 years, where we saw some volatility in the first presentation. Thank you.
Okay, thanks. I think Kathleen Valley is probably a fairly unique deposit in the sense that we're actually mining it underground. So for the first 3 years, there's the 2 open pits that are under development that we showed there. Kathleen's Corner is by far the biggest open pit, which will run and provide the majority of feed for the first 3 years. Mount Man is going to be like a giant box cut, is how it's described to me by mining guys, which will then provide access to do lateral development underground. And underground, there are smaller areas of higher grade, but overall, the Kathleen's Valley, what's beautiful about it is it's a big block, and so it's very efficient for us to mine underground without much dilution, and so provide a very stable feed for the concentrator. So there are optionalities around an ore body of that size, and so there are opportunities to potentially expand, as we've talked about, and maybe even beyond the 4 million tons. But yeah, there's not necessarily a plan to target high grade pockets depending on pricing.
You mentioned Tesla and Ford as 2 clients at the moment. Are there others, and do you have any Chinese investment interests?
Yeah, so it's Tesla, Ford, and LG Energy Solutions. So those are their 3 offtake partners. They account for, we used to say 90% of offtake when we were at 500,000 tons, but we have actually expanded to 3 million tons. So we should have a bit more material available for spot sales and potentially to commit to downstream. But we don't have any Chinese partners at the moment, and we don't have any Chinese investment.
So yeah, as Phil touched on, I'm here to talk about Blackrock Mining. We're developing the Mahenge Graphite Project in Tanzania. Important disclaimer. Okay. So how are we differentiated? We have a tier 1 scale project in Tanzania, and by tier 1 scale I mean it's the 2nd largest reserve globally. We're going to be first quartile on the global cost curve in graphite. Driven by 2 key factors. We have very low cost power in Tanzania at around 8 cents per kilowatt hour. It's also up to 70% hydro, so it's clean as well. We're also backed by the largest ex-China anode producer in POSCO, who's our major shareholder, life of mine offtake partner for the fines for the first module, and they're also providing a 10 mil prepay. Importantly, graphite is an industrial mineral, and so understanding your customer is crucial, and they provide very important customer validation after years of test work on our product. We have all the key government agreements in place in Tanzania. We're basically construction ready, subject to debt finance. The debt finance is progressing really well. We're expecting to have credit approved term sheets in hand by 30 June this year. And as you can see, there's very substantial upside here if we can execute. The NPV of the project at expert consensus pricing is about 2.1 billion Aussie versus our market cap today of around 130, 140 million. We've got importantly, these days, the quality of the team is crucial in terms of execution. We have a very experienced board with over 100 years experience in financing and developing mines. And we've also been building out the C-suite. Probably one of the key guys here is Daniel Pantanay. He's been an EPC contractor building mining projects for many years and was involved in the construction of Balama's Cyrus Balama project in Mozambique. As Phil touched on, graphite has a pretty important role to play in lithium-ion batteries. It represents around 95% of the anode in most of the different battery chemistries, and there's around 7 to 10 times as much graphite in a lithium-ion battery as there is lithium. These are the various prices. Where Mahenge is differentiated, we have more large flake product than most of our peers, which is a higher value product. Compared to the Chinese producers, it's like having a byproduct credit that they don't have. So very, very powerful. And our average basket price at the moment is around $1,200 US a tonne versus our expected all-in sustaining costs of around $520. We actually build the project in a series of 1 million tonne per annum modules. The first module produces about 90,000 tonnes of graphite concentrate, and it costs us around $182 million US to build it. We then use the free cash flow from that project to build a second module, a third module, and a fourth module. So in this way, we have a very large project, but by building it in a modular way, it keeps the capex down, and it also lets us expand as the market expands rather than flooding the market with a very big project. Here's the cost curve for graphite. Importantly, 70% of the supply of graphite comes out of China. So if you want to be a graphite developer, you need to have some serious advantages, otherwise you are going to get skinned. We've got 3 big advantages. The first I mentioned is power. If we were on diesel gensets at say 32 cents a kilowatt hour instead of 8, we'd be add $200 a tonne to the cost there. So you can see we'd immediately go from the first quartile straight to the fourth quartile. The other advantage we have is the large flake, which I mentioned, which is worth about $100 a tonne. The Chinese don't get that benefit. And then the third point is we're actually able to produce higher purity concentrates than most of the Chinese mines, which produce about 95% concentrate. This is a really important slide. The gold bars here represent qualification. In graphite, it is crucial to understand your customer. With POSCO, it took us 4 to 5 years to complete the qualification process, 610 tonnes of test work, and around $20 to $25 million. So it is a major barrier to entry. It's the first barrier to entry, is qualification. The second barrier is getting your debt facility, and most of the customers are in China, and lenders not crazy about Chinese counterparty risk. So 2 major barriers to entry here. In terms of our time frame, I touched on the term sheets for the debt due by 30 June. We're targeting up to 50% debt, and the construction period is 20 months. So we should have our first module up in production in early 25. And here you can see the modular approach to building the mine. The first module is quite a bit more expensive than the others because of all the associated infrastructure. This is the near-term news flow. Quite a lot happening at the moment, a number of work streams happening in parallel. POSCO is in the process of converting their term sheet into a full form offtake agreement. We should see some news on that shortly. We're also running a partner process. You can see the second last bullet point down here. The idea is because of the big differential between our market cap and the NPV of the project, we're potentially looking at would it make sense to bring in a partner at the project level if that partner was willing to pay a material premium. So we're running a process there, and Macquarie has been mandated, and there is a lot of interest. That's probably it. We still, the important point to note here is the POSCO only has the rights to the fines for the first module. So they have a very strong growth profile, and they're potentially interested in buying the fines for the other 3 modules as well. So I'll probably leave it there for questions.
Will the Tanzanian government getting a percentage of free carry of the project?
Yes, they will. All those numbers on the slide, I might just throw it back here. So the NPV, 1.4 billion US or Aussie 2.1 billion, that is post-tax and post the Tanzanian government's 16% free carry. So that means we have to fund the 182 million of capex ourselves. They don't have to contribute, and then they get 16% of dividends.
Oh, sure, thank you for the presentation. Can you differentiate between synthetic graphite and the naturally occurring, and whether the constituency within a battery as such is differentiated between the two?
So we do actually have, normally go on into the detail quite a lot about this. I'll just see if I've got the slide on it here. I took it out. Look, the reality is the graphite that goes into batteries is around, at the moment it's about 60% synthetic and about 40% natural. There are different pros and cons. The big natural graphite has 3 big advantages over synthetic. 1, it's a lot cheaper. 2, if you want to intercalate more silicon into the anode over time, which is what most analysts are saying is how the performance is going to be improved, you actually need more natural graphite because you can't intercalate silicon with synthetic graphite. So if you want more silicon in there, you need more natural. So that's performance, that's the second point. And the third point is ESG and environmentally friendly considerations. So synthetic graphite is very energy intensive to make, okay? They typically take the ingredients, heat them up to 3,000 degrees for a couple of weeks. So the carbon footprint on synthetic graphite is something like 3 to 4 times that of natural graphite. So yeah, that's a real consideration. In our case, because we've got the hydro that we're using for our power, synthetic graphite will be something like 9 to 10 times the carbon footprint of our graphite. So we've got that real green angle, which is important these days.
With the project being so reliant on this hydro power, how are you going to stop the government trying to increase the price of that power? How can you cap the price so you don't get
It's a good question. The entire Tanzanian economy is built on hydropower at 8 cents. At the moment, it's 40% hydro. There's a new dam going in called the Julius Nyerere Dam, which is built. They're filling it up now. That should increase the percentage hydro up to 60 to 70%. And also the Tanzania will then be long about a gig power, which would be helpful. There is no guarantee that the Tanzanian government might not increase some sort of tariff on the power. However, they are getting a 16% free carry, and ultimately, when you add up the 3 bits for Tanzania, the 30% tax, the 16% free carry, and the 4% royalty, the government's got about a 50% take all in of the project, and they're reasonably happy with that. So, look, I can't see them cranking up the power to the entire Tanzania economy. It'd put a whole lot of businesses, out of business, I think. So there's no guarantee, but look, I think that the infrastructure in place there is pretty helpful, and I'd certainly much prefer to be on the grid on hydropower than on diesel gensets exposed to the oil price, which could go anywhere.
Thanks, Phil, and thanks very much, ladies and gentlemen, for the opportunity to take you through the Andover story. Originally, Andover project was the Andover nickel project, nickel, copper, cobalt sulfides. We've identified 2 deposits, and they're in the pre-feasibility study stage at the moment. More recently, we've identified that there is a significant opportunity for a large-scale lithium resources there, and that's what we've switched a lot of focus onto the lithium exploration. Project's located in the northwest part of Western Australia in the Pilbara region, so it's iron ore mining territory just to the south of us with Rio Tinto's operations. Just to the north of us, we've got Chevron and Woodside with their oil and gas. Town of Karratha there, all the potential infrastructure that you could possibly need to build a mining operation is right there. It's definitely a tier 1 location. And the mineral resources that I show there is for the nickel 6 million tonnes at just under 1.5% nickel equivalent. Those nickel resources are, as I say, undergoing pre-feasibility study as we speak. But the main story at the moment is all about the lithium story. This is an outline of the project area. It's around about 108 square kilometres, shown outlined there in blue. The identification of the pegmatite started about a bit over a year ago. We've now identified over 700 outcropping pegmatites. They contained within an area that's a wedge, a triangle, around about 9 kilometres long and maybe up to 5 kilometres wide on the eastern side. Individual pegmatites outcrop at surface for over 1.5 kilometres long, 100 to 200 metres wide at surface. So there's significant size to these pegmatites. And we have identified through our surface sampling lots of very high-grade lithium at surface as spodumene. So these rock chip samples we've collected at surface are some of the highest grade rock chip samples that have been taken at any time in Western Australia's lithium exploration history. So we're currently drilling. We're currently drilling in this area, just in the northern section there, outlined in white. We're currently focused on that because it's the only place within that red triangle for which we have environmental and heritage approvals to go drilling. Those approvals were specifically for a nickel target. Fortunately, there's some good-looking pegmatites right next door to that as well. So we are continuing with the exploration there. The heritage surveys and the environmental surveys for which we need approvals to go drilling, and there's other targets, have been completed in some of the areas, and we are now awaiting those approvals to come through formally. But we do expect that they should be coming to us within the next couple of weeks, and we'll be able to expand the drilling program out much further than where we currently are. So in that area where we're currently drilling, we've got 2 diamond drill rigs going at the moment. We've completed, as we speak at this time, around about 12 holes for about 4,000 metres of diamond drilling. The first 4 or 5 holes are shown there as those blue lines on that cross section. We have been hitting pegmatites in each of the drill holes, and within those pegmatites we're visually identifying spodumene within those pegmatites. So it is a potentially lithium-rich pegmatites. Assays are still awaited, and as usual, and that's been ongoing for a while, the laboratories are taking quite a long time. We were promised 4 to 6 weeks. It's now looking like it's going to be 6 to 8 weeks to be getting our lithium assays back. But meanwhile, we are still drilling with those 2 diamond rigs going, and we have now expanded the drilling further to the right-hand side of that cross section, or further to the south, and we've been able to collar some of those holes, those drill holes, actually on top of the outcropping pegmatites. So we are being able to, in more recent holes, be drilling through pegmatite mineralisation from surface down to whatever final depth we're going to, which is at this stage is around about 200 metres below surface. So that exploration is ongoing, and this is just a quick snapshot of what some of the holes look like. On the right-hand side, there's a hole called AND 199. We drilled this late last year in order to test a nickel target. Unfortunately, the nickel target didn't turn out with much in it, but there was a really nice looking pegmatite that was intersected within that. And within that pegmatite, we got just over 7 metres of 1.5% lithium. So good grade, reasonable width, not bad for a hole which accidentally hit that mineralisation. So we are now our current drilling is a few hundred metres away from this area. And as I say, we are hitting a lot of visible mineralisation. And on the left-hand side, the photograph on the left is a piece of drill core for hole 202. And you're looking at the white crystals there. That's your spodumene, that's your lithium-rich mineralisation inside a grey quartz background. And so that's typical of the mineralisation that we're seeing. Now that one photo on the left-hand side, we don't yet have assays for that, but one would expect to visually identify that much spodumene within the drill core that there's a realistic expectation that the lithium grades are going to be quite high. So Azure is actually pushing this forward as quickly as we can. And I might just jump in there and say that we're doing this with the assistance and the financial support of SQM. SQM is the world's second largest lithium producer. It's a Chilean company which has moved into Australia. It's a 50-50 joint venture with Wesfarmers, building the Mount Holland lithium mine, processing facility, and a lithium refinery south of Perth as well. They have come on board as a 20% shareholder of Azure by contributing $20 million. And it's those funds which are enabling us to accelerate our drilling as quickly as we can. So we have a 40,000 metre drill program underway now. The first 4,000 metres of diamond drilling behind us, and we're continuing with the 2 diamond drill rigs. As soon as we get the heritage and environmental approvals, we'll be moving RC rigs out to the program. So one would expect that by the middle of this year, we'll have 4 to 6 drill rigs operating, and we'll be testing those many different high priority targets we've identified there that have got this high grade lithium at surface. The important thing that I guess it's not an exploration target that you see up there, but this is the strategic objective that I have set for our exploration crew. Demonstrate to me before the end of this year that this project at Andover has the potential to host more than 100 million tonnes of lithium resources. If they can demonstrate that they've got that potential is real, and if they can demonstrate through additional drilling we can get to the resource stage that we do have 100 million tonnes of lithium resources, then this would put the Andover project into the top 10 in the world in terms of size. SQM did not invest $20 million into us to find a 10 or 15 million tonne resource. They invested that money into us because they foresee the potential for this project to be in the top 10 in the world in terms of size. And just a quick snapshot on the nickel side of things, which is the reason we actually bought into this project to start with. If we've got 200 diamond drill holes being completed, we've identified 2 deposits. We've got just around about 6 million tonnes of nickel and copper and cobalt resources there for about 100,000 tonnes of contained metal. Work is still continuing on that project, and as we go forward, we will continue to grow the nickel side of the Andover story. But where we are for the project going forward, the objectives for this year, as you can see, it's to drill on the lithium. Let's get 4 to 6 rigs out there, drill as fast as we can, identify that we can confirm that we have that potential for plus 100 million tonnes, drill it out to the mineral resource stage, and then just kick this one on as absolutely as fast as we can. And on the nickel side of things, it is much the same, continuing to drill, expand the resources, and move into the next stage of the various studies. And just quickly, finally, on the corporate side of things, about 390 million shares, so market cap's about $150 million at the moment. As you can see on the major shareholder table there, we're SQM at 19.99% on the project, and a number of other groups in there as well. So the projects and the company is very well supported, and I would just say thank you very much for that opportunity to tell you the story. It is one that is really growing very quickly, and I expect that later this year that we're going to have, or throughout the rest of this year, we're going to have a lot of very important news flow being released. Thank you.
Just was hoping, I know the lithium is very exciting, but I was hoping you could talk a little bit about the nickel and where your expectations on both cost and production are.
Yeah, no, we're completing, just about to complete the scoping study and moving into the PFS stage. We've not published any numbers on the costs, either operating or capital at this stage, so I can't really comment on that, other than to say that if it's not a positive outcome, we would not, at the scoping study level, we wouldn't be moving into the PFS stage.
Just to clarify as well, I was actually hoping you could talk a little bit about the price of lithium on spot. Nickel on spot level as well.
Nickel price has been quite in quite a reasonable range over this year, $22,000 to $26,000 a tonne for US for quite some months in a row. But we know that nickel is very erratic and volatile, and it always will be going forward in the longer term. It is what it is. We will keep, at this stage, at the current prices, the project looks, good. But we shall see what happens in the future.
Good afternoon all. Thank you, James. Thank you, PAC Partners, for the opportunity to present the Burley story today to investors, ladies and gentlemen. My name's Wayne Richards. I'm the Managing Director and CEO of Burley Minerals. And today we're going to predominantly talk about the Chubb Lithium project in the Quebec province of Canada. Again, disclaimer and forward-looking statements. And through the presentation, we'll just show you how expeditiously we've moved this project from first observing it in September last year, looking to do a deal in October, consummating that deal in the 8th of February, and then having a rig on the ground within 2 months of that, and we're now in the first month of drilling. So the whole process of acquiring and looking at a strategic investment as well on Bouvier has all happened in under sort of 4 to 5 months. So where are we? We're obviously in the Tier 1 mining provinces of Quebec and Western Australia. So as part of the association of the deal of acquiring Chubb Lithium, we also acquired the Mount James and Dragon lithium projects in the Gascoyne, which we'll talk to quickly in a minute. But the main project, the Chubb Lithium project, is 35 contiguous mineral claims. It's in the southwest province of Quebec and has a high-grade zone of up to 120 metres long at 1.5% hard rock spodumene lithium bearing. And the diamond core commenced, and we're now at about hole number 9 after just under 4 weeks. On the 5th of April, just last Friday, we put out the first visual results, which we'll talk to in subsequent time. When it comes to lithium, other than obviously the resource, which you can't change, when you prove it and prove it out, then it's all going to be about the development costs, the operating costs, and location. So we're fortunate in the sense that we're in the what we call the Abitibi or Abitibi-Winnie province, which you'll see in subsequent slides, and we're surrounded by the big neighbours with the multi-billion-dollar market caps in the form of Sayona and Piedmont. So where that becomes relative and significant is obviously depending on the number of projects we acquire, the grades, and or the quantum. You'll have optionality as to building your own or potentially being an option of a mine gate sale to feed the one and only hard rock spodumene operating concentrator in Canada as we speak, being Sayona Piedmont's NAL project. Bouvier, very exciting again. We're in the process of acquiring Bouvier. Bouvier has 6 additional mineral claims and it's strategically located within 14 kilometres of the Chubb Lithium project to the northwest, and again in a radii or radius of 20 kilometres of the working concentrator, and obviously infrastructure, which we'll talk to. Mount James and Dragon Lithium, again, right province, right location in the Gascoyne, and we're pretty well along strike, potentially from Red Dirt, now Delta Lithium's project that they're obviously running 5 RC rigs at the moment to drill out and prove their resource at Unithera. In addition, the company was floated in July 2021, and in the assets we also have iron ore. So lithium and iron ore being our key commodities at the moment. Cane bore looks very prospective and very good for the form of channel iron, with the opportunity to look at the outflow. So it's good to have iron ore, it's good to have good grades, but it's all about logistics and how you're going to get it out through a port and how far you've got to truck it, because you're not going to get on a rail line, as we've all learned as juniors probably 10 years ago. So cane bore, we're in the process of putting in the CMP, and we got the native title exploration agreement last week. Broadflat wells and Hardy, again, channel irons and BIFs, and the project or company was originally floated on the Urucoin magnetite project, which is at New Norcia, 120 kilometres northeast of Perth. So again, you know, the iron ore is there. It's just a matter of going through that process and the multiple stages of development, and a strategic partner I would consider in the future. The board, 4-person board with a recent appointment of David Crook also. So again, you've got the right suite from a geologist, mining managing director and miner in the form of David, Jeff Brill, Ecologica, and good for EPCM and approvals. Myself, having worked through nickel, cobalt, iron and lithium in various roles with various companies, big and small, and Brian Dixon, the non-executive chairman. And the bottom left-hand graph shows the trending for the last year. The 2 dips are obviously associated with the dips that everybody went through pre-Christmas and again last month, whether you're a producer or a potential operator or explorer. So we're holding our own. We have a tight register of 88 million shares and a market cap of just under 26 million. At the beginning, we alluded to the location, excellent Tier 1 province, and you can see that green light's working there. The lithium projects, the location of Bouvier and lithium with regards to NAL's joint venture, and other tenements owned by the likes of Winsome, NAL and Piedmont, and Moblin again, Sayona's, and then you move upwards towards towards the top of the slide to James Bay, so that if you get an idea, we're 450k north of your Quebecs and Torontos. Not Toronto, sorry, but Quebec and Ottawa and Montreal. Full access from infrastructure, so all year round. You can drive in, you can fly in. Val-d'Or is the nearest town. It's got 17,000. It's been set up on gold, and it's perfect for actually getting getting access to, being able to get skilled labour, and obviously get there at any stage. And we've got the luxury of just going down the local highway, 32 kilometres from a town of 17,000 people, 2 kilometres in on a logging track, and we're on tenure. So, again, probably just quickly reiterating, there's the 25 mineral claims for Chubb, Bouvier for the 5 mineral claims. The striking generally comes across from a northwest to a southeast direction, and Ortia is also a supplementary mine for the Sayona Piedmont refinery over here. Traditionally, there has been drilling done on the Chubb Lithium project way back as early as 1949, 1950, back in the 90s. And when we acquired it from NDC earlier this year, there is obviously confirmatory drilling and some results that confirm a 560 metre strike by 240 wide, with average grades anywhere from 1.2 to 1.5. Won't go through the results there, but you can see where we've got good intercepts, good grades, all from 1.2 to 1.5, with ranging widths from 5 to 12 metres. And again, reiterating the radius to working mines and the working concentrator that persists in the province, or Quebec, or Canada for that matter. Again, that's Lithium, Chubb, and of the 35 contiguous mineral claims, you can see we're only operating in 2 presently. While it's a bit noisy, you'll see in the next slide that we've got the POW equivalent through MERN, and the aim is, now that the ice and snow is thawed, to come up and do a mapping, sampling and preparation results up in the northwest corner, and continue to look and widen, expand the number of dikes and or spodumene bearing pegmatites in this region. In the announcement, which is probably better to look on the 5th of April on the ASX BUR, Burley, that we put out on Friday, the historic potentially 5 parallel dikes, with the main dike in the centre, and obviously the cross sections, that being cross section A, showing 13 metres at 1.16, again moving to cross sections B and C, which are all basically stepping north in east-west orientation. And then obviously a longitudinal result as well, showing the grade. So at the moment, most of the drilling has been done that would be perceived to exist in an open plan mine, and we haven't gone deeper yet at this point until we at least scope out, you know, the orientation, the direction, the grades, the quality and the quantity of what's at Chubb. Quickly on Bouvier, which we are now looking to acquire 100%. Again, 14 kilometres northwest. Similar in the sense that they've done trenching, 6 parallel trenches to get an average grade of 1.5 over 120 metres, with some logged spodumene back in 2021 or 1990s. Again, close to surface. So again, that's looking very prospective, and a very good opportunity, having a look at the rock chips and the trenching that's been done to date. Once that project is acquired, we'll obviously then put in a program of works for the relative drilling that we would do, and then move the rig or rigs around between the 2 tenures. Mount James and Dragon, again, a bit about location and our partners, or partners as in mining companies in and around the project. It's known, Unithara, for its lithium, as you would have heard, or if you're following Red Dirt, now Delta Minerals, Delta Lithium. And we're aiming to put a field reconnaissance team in there next month, now that we've got full access. So in summary, lithium in Quebec, hard rock spodumene, right place, right location, very strategic acquisition for ourselves. The Gascoigne, we will scope, develop and expand as and when we get on the ground next month. And we've got significant iron ore assets which we will continue to appreciate their value as we step through their various stages of development, tight capital structure and the right team to take us through the next stages. So thank you very much for your time and over to questions.
Hey, Wayne, the good photos that you put out on Friday, what's the expected turnaround time from the lab to get those assay results back?
The 4 holes are actually in Vancouver, and it's probably within 2 weeks now.
So what's the target in the next 1 year? How many meter or how many drill holes you gonna drill?
At the moment, on the budget basis, we're probably looking at a 20,000 metre drill program, and it'll be all diamond core. Diamond core seems to be very much the norm up there compared to RC, and obviously you get the opportunity with that to better interpret and obviously use your core as well for metallurgical testing.
Thanks, James. Thank you. I have lots to get through, so I'm going to talk fast. So we're on a mission to be a big part of the North American lithium supply chain, and to do that, we've got a handful of assets now, and obviously my background in development is going to come to the front. It's a bit about myself. Been in development for over 20 years, 5 of which I spent down at Fortescue building some of their assets before moving to Burley Minerals as the project director on their flagship asset. At Loyal, we're pretty passionate about lithium, and we believe we're still early, and it's just the beginning. And from the technical nature of my experience at Pilbara, it's not just about the resource potential. The whole value chain has to be considered, and that's why we built a business strategy where we're targeting North American lithium. And we've got 4 projects currently in our portfolio, with Hidden Lake project up in the Northwest Territories, and then 2 over in Quebec, James Bay, the Brisk, and also the Trieste project, and also Scotty Lithium down in Nevada. But today I want to focus on our new acquisition, which is a Hidden Lake project up in the Northwest Territories. And we love it. And the reason why we love it is because it's underexplored but still well understood. And we're doing this project in combination with our joint venture partners in Patriot Battery Metals, who are a minor shareholder in 5 of the claims. So it's a little bit deeper on why we love it. We think it's got great resource potential. There is 14 known spodumene-bearing pegmatite outcrops on the property, 10 of which have been drill tested, but there are still 10 that are underexplored. And in fact, there's been so little field mapping done on this project. In fact, it's been dormant for about 5 years. You can almost see where they've walked down south on the property to find extra pegmatites. But just on the resource potential, up on the 4 main dikes, they have a cumulative strike length of 2.25 kilometres, and there's been 10 drill holes popped underneath these to confirm that they extend at depth, and they've only gone down to about 30-50 metres, but there's good grades and they remain open at depth and along strike. But as you know, it has to be mineable, but we think they are. With the 2.25 Ks of outcropping pegmatites, the fresh exposed resistive outcropping, so we think there's significant tonnes just at surface, with widths up to 11.5 metres. There's also evidence, if the geology or the geometry of the geology proves up, that we can go underground.
I'm not sure I understand.
On the mineralogy point of view, or the processing point of view, they've already done extensive test work, and it's well understood. And the ore itself is quite simple. It's predominantly spodumene with quartz and feldspars. The iron content is particularly low, globally and also for the region. And the mineralogy supports all the conventional concentration techniques, such as your DMS in the photos and also flotation. And this was produced from a pilot plant about 5 years ago. So we also think there's something, real possibility here, because the geological and metallurgical relationship is really telling us there's a simple modular flow sheet possible with a multi-stage DMS, with the first stage being what we call mass rejection, and 50% of the mass can be rejected before it even goes in with very little lithium loss, and that's due to its high liberation factor. And it's right on a highway, an all-weather highway, 45 kilometres from the capital city of Northwest Territories in Yellowknife. It's the Karratha of the North. There's 20,000 people. It's got all your mining services there. It was built around mining. We've got a domestic airport that goes throughout Canada, all-weather roads down into Alberta, and then on the other side of the Great Slave Lake, there's a newly finished rail terminal, and there's significant backhaul both on road and rail to get spodumene either down into Canada or over into Northwest Territories. It's how excited a guy gets when he sees spodumene. So we think we've got the ingredients, and we're going to wrap a team around it, us and our partners at Patriot Battery Metals, and we're going to start engaging with the government and the community, and we hope the market joins in the party. We have a three-stage work plan that will be kicking off. First, the land and community, where we'll be engaging with the First Nations, the Yellowknife community, the government. We're doing environmental baseline studies, the regulators, approvals, and the business community. And as soon as the snow melts in this summer, we'll be getting in there and doing field mapping, and then ultimately drilling once we have our permits, hopefully in the winter. But we'll also be getting straight into studies. The Environmental Review Board of the Northwest Territories have come up with a concept to fast track these large projects, and they want to start seeing concepts of what mines could look like in order to fast track those consultations and the process. But after that, we'll be going straight into scoping studies, feasibility, and looking downstream. So for an investor, check out Lift Power. They vended in 14 pegmatites around the Yellowknife region. They have a couple of them to the north of us. It was 155 million Canadian scrip deal. Our vendors, about $6 million. They're going to be escrowed up to 24 months. And we have plenty of cash on hand, 6.5 as of December, that should be. So we're fine to take out all the exploration and the study streams until calendar year 25. The ASX have asked us to pull together a prospectus and for recompliance purposes, and with that, they're making us do a raise for spread purposes only. After the vending in of this package, we'll still have an EV sub 20 million. A little bit of love for our other projects, which are just as exciting. Over in James Bay, the Trias project is just 10 k's away from Winsome's Adena find. That's had some great drilling over the winter. And we've done some great multispectral analysis that's taken the signature of their finds and found some high targets on ours. But we've combined that with a whole bunch of stuff, including the historical data that we obtained from a Cisco in the acquisition, and the regional assessment, and we'll be hitting the ground in June for a 12-week program where we collect up to 1,700 samples in priority order. And lastly, announcement's just been released today. Over in Nevada, we have a sedimentary project. Obviously, there's lots of support and activity for domestic supply in Nevada, but we have hit a large intercept of clay from surface to 117 metres. And this is just confirming what we thought was there via our MT interpretation, which is a large 3.6 square kilometre basin of sedimentaries, starting from about 170 now we've confirmed, and hopefully going deeper in the end. But that inferred basin is actually below some very high soils that are up to 448 parts per million. It also has a very high boron anomalous of 336 parts per million. And this is only 1 kilometre away from our neighbour, who have had some phenomenal test results and drill results in 2022 that have boron and lithium. And if people are interested in understanding the different types and where it is, I've produced this to really support the opportunity at Scotty's. It's quite a different mineralogy down there. It's more of an evaporitic. But that's probably me.
Any questions?
Just on the chart that you showed with the like years, they have the mining operation up there as well.
Oh, yep,
So,
yep.
And one thing I noticed is that of the other mining operations that were highlighted on that map,
Yep.
They were all kind of very big, 3 diamond ones, 1 that was rare that's in Burley. Is there any potential for discovering other minerals that you're potentially looking for? I know it's a lithium project.
So I think on this one, we know so much about it already that we are going to be intercepting lithium. They weren't up there chasing anything else. There is lots of complexities, other areas around. We've obviously got vitals, which is a rare earth. And there's actually some lithium held by Lift Power just near vitals that is quite complex. And so it's got lots of tant. But there is tant in those drill results, about just under 100 parts per million. So that's definitely a viable tant source as well. We're focused on the lithium primarily. But yeah, there's diamonds in the region, there's history of gold, there's nickel, there's gas. Like there's lots of activity up there, you know.
Thank you.
Thank you, Evan. Great presentation. Just in relation to Hidden Lake, I'm just wondering if you've got any geophysical imaging in that area, which it's wonderful to have outcrops, but it's nice to know if they're continuous at any depth and they're not offset, so you don't waste any drill holes.
Absolutely. We wouldn't be popping a hole in unless we knew where we're going. I think there's plenty of drill targets for us. There has been some geophysics that with the existing data. However, we will be doing more, especially the multispectral stuff from satellites, work to treat and is working to treat in other places around Canada. So we will be deploying that. But absolutely, it's definitely a step for us.
I won't talk about pegmatites or spodumene today. I'll talk about a different area of the lithium industry with brines and the evolving sedimentary space. But I've got 8 minutes to talk about a project that I've worked on for 8 years, so I've got to be quick. So Arizona Lithium, we've been around for quite a while now. We know that the downturn in 2019, there's a little bit of a downturn now for lithium. But being in Arizona, you see a lot of electric vehicles on the road. You see the massive demand that's coming. And I think those numbers, I don't disagree with those numbers we discussed previously, but I think that the mines are not going to come on stream as predicted. That's just my opinion, permitting, etc. And being in Arizona, you see the cars, you see the renewable energy being created. It's got to be stored somewhere. So the demand for lithium, I still think is being understated. But let's quickly move through the slide, the standard disclaimer, of course. All right, what have we got with Arizona Lithium? We've got two large development projects with large resources. So we've gone past that exploration stage and we're into the development stage. The reason why they're development is because the Prairie project up in Canada that we recently acquired comes with 4.1 million tonnes of LCE. That's in a brine and it's in a oil and gas producing region out in the prairies. I wouldn't suggest you go there. I was there last month. When I left the airport, it was minus 21. They had to de-ice the plane. So not a great spot, but a good spot to have a lithium project. So don't go there on holidays. And the Big Sandy project is the one that I've been working on for 8 years. I'm the original vendor of that project, and that is in Arizona. It's just north of Phoenix. And we are lucky to be have that project in Arizona. It's a great place to operate. They're very mining friendly. It's the 5th largest copper producer in the world, and they're very business savvy. I was over the invitation of the governor for a 4-day CEO forum, which culminated in the Super Bowl recently, and we sat in the governor's box for the Super Bowl. But over those 4 days, they told us how good Arizona was, and they didn't hold up. So they're very pro-business, and we're very happy that we're going to develop the Big Sandy project in Arizona and be producing from that area as well. So very mining friendly, both areas are. Saskatchewan is a historic oil and gas producing area. It has a very high water cut, so it's not dissimilar from lithium brine production. These definitely are two world-class projects. There's no doubt about that. If you think about that resource, that combined resource of 4.4 million tonnes, the current market for lithium is about 1 million tonnes. as in the demand, the world demand for it. So that's a huge resource, and both can be increased significantly, particularly the Big Sandy project, because we've only drilled 4% of the land holding. We have built the Lithium Research Centre in Tempe, just near the airport in Phoenix, and what we've done there is we've basically tried to create a research centre which helps us with our feasibility study, builds our pilot plant, and it's all in-house. We did find that the lithium industry is only evolving, and it was very difficult to get good contractors. So we've done it ourselves. We spent about $5 million on that, and it's a world-class facility. We're finding that all the major players in the lithium industry want to look at the Lithium Research Centre, and that's a real positive for our profile in the industry. I have built a team over the last 18 months of lithium experts. They're very hard to find because it's an evolving industry and it's a very small industry. But our CTO built the pilot plant for the Lithium Americas Thacker Pass project, and he comes in very handy, and he's a very important part of our management team. Just to show where we are in regards to North America, and the Prairie project sits up there out in the prairies in Saskatchewan. As I said, it's an oil and gas producing area. All the landowners are very familiar with the production of oil and gas, so we don't expect any permitting issues there, and it can be permitted very quickly. And then down into the Big Sandy project, just near Phoenix. And we also have another project, which is a brine project in Lordsburg. Now, I could show off if I wanted to and put the type of facilities that are there in North America, such as gigafactories, etc. But I don't need to, because this product will sell itself. Selling the product is not the difficult thing. It's finding it and processing it. So I wanted to show you this slide because this is the battery cell producers, plants that they're planning to build in North America. And obviously these are getting a lot of funding from the current Biden administration through the Department of Energy, the Department of Defense, and the Inflation Reduction Act. So I think this administration has finally woken up that they're behind the 8 ball when it comes to lithium production. And if you think about it, the only lithium production at this present time is in Nevada, and it produces a small amount of lithium. So this huge continent that is so dependent on lithium has one producer. It's amazing. Okay, the eastern part of Canada will start to produce from spodumene, but the US really need all these projects to go into production to go anywhere near satisfying the demand. And when talking to government officials over there, they're very conscious and very aware now of the Chinese stranglehold they have over the lithium supply industry, because basically any material that's mined has to go to China or Asia to be refined before it is a final product. So very topical issue, and in fact in the US tonight 10 million people watch 60 Minutes in regards to direct lithium extraction. So it has hit the mainstream media. I'm very involved in the lithium space. I go to battery conferences, etc. But it has hit mainstream media, and that's really positive for us, being two development projects in North America. The Prairie project, as I mentioned, is in Saskatchewan. It's a high quality inferred lithium brine resource, and the reason why it is an inferred resource because of so many oil and gas wells have been drilled in that area. Now, Prairie have drilled 3 wells of their own over a 27 kilometre space, and I think that resource can be expanded significantly. Direct lithium extraction. This is something that will change the industry. The industry is very young, but direct lithium extraction basically is a process, and I don't know if you followed Lake with Lilac Solutions. They are kicking some real goals there. There's a lot of other producers of direct lithium extraction that are starting to kick goals and take it from lab to commercial activity. And this is an area of the market that will produce large quantities of lithium, and very good quality lithium. A lot of the direct lithium extraction techniques are very selective. So therefore, you are pumping all those material that are very difficult to separate from, say, a spodumene project or other projects. You're putting that back straight back down into the ground, and you have a very good product. It still needs to be processed, but it's not as a secondary product as something like a spodumene production. But I personally believe direct lithium extraction will get a lot of publicity in the future, and so watch that space. The acquisition that we did at the end of last year to acquire Prairie increased our resource significantly, and the reason for that is that we haven't drilled out our Big Sandy project. We're very happy with the acquisition, and we are very focused on the DLE technology that Prairie have been developing in-house. They picked some goals with that. It needs some further work that will be done at our Lithium Research Centre, but in tandem we are evaluating third-party direct lithium extraction techniques. So if you want to take a step back, I assume a lot of people know about lithium here, but the projects that produce from brines in South America, they flood big lakes basically, a bit like a salt operation, and they evaporate the material off and it goes from one lake to another, and they take up a lot of area. So in an ESG world we live in, that's not acceptable, especially in North America. So some highly knowledgeable people have been trying to develop this direct lithium extraction. It's basically filtration. So you bring the brine up from a depth, maybe 2,000 metres in the case of the Prairie project, you put it through the filter, and then you re-inject that material back down in effectively a saltwater disposal well. So no real difference to oil and gas production that has a high water cut, and very environmentally friendly. So a very small infrastructure at surface which can be taken away. And I think that's really important in the ESG world that we live in. This project is especially attractive to our board because it has large flow rates. In this basin in Saskatchewan, the Williston Basin, it's the grade of material is a bit smaller than some of the other lithium brine projects, but it has huge volume, so therefore it can produce large quantities of lithium. I've been given the bell, so I'm going to move quickly. I did discuss the 27 kilometres there at the Prairie project, and the grade was very consistent. So we're very happy with that resource, and we're upgrading that resource at the moment and working on a preliminary economic assessment. There's a little bit about how direct lithium extraction works, but I would suggest you guys have a look at direct lithium extraction. I think you can make a lot of money out of companies across the board in regards to that area. The Big Sandy project, I talked about that. That's the one I've been working on for 8 years. We have a huge exploration target, and we have a resource of 320,000 tonnes, and that can be expanded massively because it's only over 4% of the land holding. It's a sedimentary project, and we are advancing that with a DFS. So 2 advanced projects. This one just demonstrates the type of simple ore body that we're talking about, and that's why Big Sandy works, because it's basically a quarrying operation. The strip ratio is basically 1-to-1. Very easy mining process. And this is our additional drilling that we're going to be doing next quarter, and we're just expanding the resource. The current resource is a 12-year mine life. We'll be taking that to 50 when we drill out areas B and C. A very simple drilling process, very simple geology. All right, the Lithium Research Centre, I'll jump over that, but that is a world-class facility, and we're very proud of that. All right, the news flow. We'll complete the construction of the Lithium Research Centre in this quarter. We'll get drilling approvals, and the direct lithium extraction technology will be further developed at the Lithium Research Centre. We're working on upgrading the Prairie project to increase that already quite massive resource, and we'll complete the preliminary economic assessment. I think the market will be surprised how profitable these operations are, the brine ones. They are definitely in the first quartile of cost producers for the lithium space. DFS on the Big Sandy project, and I'm also working on the NASDAQ listing. 2 North American projects, very patriotic Americans. They all want to know about these projects. To increase the visibility of the company, we'll list on NASDAQ in the last quarter of this year. Then we will commence the construction of a DLE technology field pilot plant at the Prairie project. So that will be proof of concept. We'll start to produce material and we will provide that to off-takers. It'll be of high quality and that will be a very important milestone for the company. All right, questions? I ran over, sorry.
Just on the direct lithium extraction technology, it could be misunderstanding the description, but it sounds very similar to desalinization, which has a very high energy requirement. Can you just briefly talk on the energy costs of the method?
Yeah, the energy costs are actually quite low because you have to pump the brine material out of the ground anyway to put it into evaporative ponds. There's a lot less CO2 emissions, etc., because you're putting it through the filtration system and then re-injecting with a saltwater disposal well. So therefore, there's a lot less energy and a much smaller footprint. The DLE technology that's being developed is not just one DLE tech for all brine projects, because they have different materials for the different quality of the brines, depending on what impurities you have in there. So if we crack the code for our Prairie project, it doesn't mean that can be applied to all brine projects.
Okay, good evening, ladies and gentlemen. Look, it's an absolute, I'll adjust this, absolute pleasure to be here on behalf of the Vanadium Resources team, and a big thank you to Pack Partners and Bloomberg for hosting. And so look, as James mentioned, our flagship project is the Salinas project, which is spodumene lithium in Minas Gerais, Brazil. So that will be the focus of the presentation today. Look, we discovered the resource in 2019, and since then I think we've made great progress, but I'm very much looking forward to giving you an update on key milestones over the next 6 to 12 months. So look, I'll start with the market, and look, I think the two interesting things here for me are one, you can see that from a very nascent beginning, the lithium industry from 2020 at 400,000 tonnes LCE is forecast to grow to about 3 million tonnes, depending on your forecast. The second interesting thing here for me is the key role that spodumene will play. So you can see in 2020 producing about 200,000 tonnes LCE. That needs to grow 4 times in 5 years to 2025. So in my head, look, I really don't think there's a clean energy transition without spodumene. And there's a few reasons for that. Look, so spodumene is proven, so the flow sheet is in existence at the moment, it's working. As a result, it's fast to market. I'll touch on Sigma, but as Sigma Lithium have proven, it can be very cost effective from a capital perspective. And the third point here is that we know with ever-changing changes in cathode chemistries, having optionality around hydroxide and carbonate is very important, and spodumene affords that. So a quick map of South America and a few other projects that we have, including Salinas. The point in showing this is that we have a lot of experience in South America, so I think a core competency. We've been there for over 15 years, and so we think that serves us very well in terms of getting our project into production as quickly as possible. So Minas Gerais, so this is a state in Brazil, and this is where our project is located. Look, we think this is one of the premier mining jurisdictions globally, and just to that point, there are 300 operating mines there at the moment. In terms of our ambitions of being a sustainable producer, the fact that the grid in Minas Gerais is hydroelectricity backed is excellent for us. You know, extractive industries are very energy intensive, so very good infrastructure for doing what we set out to achieve. Look, as a bit of history, we discovered the Salinas deposit in 2019, and we really only started drilling in earnest in 2022. And so last year, just for reference, we drilled 10,500 metres, and that led to our maiden resource of 13.3 million tonnes at 1.2% lithium. One point that we're very keen to tell the market is that this was very much a first touch. And so just for reference, the drilling program that we have established for this year that's funded is 65,000 metres. We have 8 diamond core drill rigs on site at the moment. And the key milestone for us is a resource upgrade that we are set to release to the market next month, in June 2023. And look, we don't have any numbers yet, but we expect it to be very big. And I'll show you some assays which I guess kind of support what we're seeing, which is very impressive. So look, you have the assay results to the left, and I won't go through those. I think the picture to the right is probably more illustrative in terms of the existing mineralised zone, which is the colourful part to the top right, what we're seeing with the drill out program is that as we move west and southwest, we're seeing that pegmatite swarm continue, and we are seeing this very strong trend in a southwest direction. The key point to mention is that not just continue in terms of pegmatites, we're seeing increased vein width, but also increased grade. And so again, very exciting times for us in terms of the resource upgrade that will come out next month. We think we'll capture this great progress that we've made with the drill bit. Look, a quick cross-section, and look, the important thing on this slide is showing that that existing mineralised zone to the right, the colourful bit, that's what underpinned the maiden resource at 13 million tonnes. The part to the left, that's what's going to underpin this resource upgrade. So, look, I'm a finance guy, so fairly simple compared, well, in the geology world. You can just see that we're really going to a much bigger scale with this resource upgrade. Look, in terms of further afield, so we will keep drilling beyond the mineral resource update in June and into the next year. The point of it being is that we really want to develop an operation here that's long life, large and low cost. And again, seeing this pegmatite trend in the southwest direction, really looking to step it out. And we do have outcropping pegmatites in the drilling area highlighted. So we think this is going to be a very few exciting years for Liontown Resources. In terms of the MET program, so that we're currently piloting with SGS Lakefield in Canada, which is very exciting because I think this is one of the best labs in the Americas. Initial results have been very attractive, so over 80% recoveries, grades reporting to con of about 7%. We know that these will need to be scaled up, but it's fair to say that today we're seeing very encouraging results. One thing to mention is that the quality of the spodumene that we're seeing is excellent, so low mica, low iron, and really what that affords us is that we feel that we can go straight to DMS processing, which is exactly what Sigma Lithium have done, which means that you miss flotation. And there are a number of benefits there, but key benefits are quicker to market, lower capital, lower OPEX, and really less complication, and really align with our objective about getting to market as quick as possible. So here we have a slide on Minisharai. The key point of this slide is that we recently signed an MOU, and really the MOU is around collaboration. And so what it does for our project is that it puts it on priority status. So it just means in terms of the permits and approvals that we'll need to push through in the next few years, that our counterparties at the state will give us priority in terms of the processing of those. And again, very much aligned in terms of the objectives of getting our project into production as quick as possible. So we have a schedule here. Look, one thing I mentioned is the resource upgrade next month, so please look out for that. Following on from that, and very much informed by the size of the resource, we have a PEA to be released in Q3 2023. And so look, that will bring together all the geology information that we have today with technical work streams. And also very important for me, it'll be the first time that we put into the market evaluation. And based on very preliminary numbers that I'm looking at, I think that will be very well received by the market. Further afield, look, we have a DFS coming out in H1 2024. So it's going to be a very busy 6 to 12 months for Liontown Resources. As mentioned by a number of other presenters, look, the build out in terms of downstream infrastructure in North America, also Canada, also Western Europe is just incredible. There's billions and billions of dollars being spent. The key question for us is that they're going to need a lot of independent supply, and we feel that our project can play a key role in that. Brazil is very well located, has great relationships with North America, so we feel we can play a very important role in this clean energy transition. This one's more or less the same, but again, Brazil very well located in these emerging, EV value chain in North America, but also Europe, which is very exciting for Brazil and also for our project. In terms of our board of directors, so look, I mentioned that we have extensive experience in South America, so that really assists us. Also a lot of experience in corporate governance. But one highlight to mention is that Peter Oliver recently joined our board. And for those who do not know who Peter is, he led Greenbushes, which is the most profitable lithium mine in the world, and also a spodumene mine. He was also the CEO of Talison Lithium. And so to have someone like Peter choose our company to support is just great validation for what we're looking to achieve. From a corporate perspective, look, very well capitalised. We have a market cap of about 350 mil. It's worth saying that we've recently completed a raise with great support from PAC, which we're grateful for. One key thing to highlight here is that on the institutional investor side, which we've seen a lot of buying from, we actually have 2 investment banks from Brazil who've joined our shareholder list. And these 2 banks were actually early investors in Sigma Lithium, which is very important for us because we think they see the story. So look, if you have any questions, please come and let me know. But thank you very much for having listened. Cheers.
How confident are you in terms of getting that resource out? I think you said even in June. So, how do you think? I think you used the word we're going to touch our central ore body at the moment. So, just in terms of scale, what the team sort of think.
Yeah, so I think, nice try, James, but I can't talk to any numbers, and it's fair to say that I haven't had any insight yet. In terms of hitting the milestone of the June release for the mineral resource upgrade, look, we're very confident. We're very much a results-driven team, so we've committed to that. So unless there's some major emergency, I don't see any change in that schedule. In terms of the mineral potential, look, we think is absolutely enormous. We have a lot of land. I think we're one of the largest landholders tenement-wise in Minas Gerais. So I think this mineral resource will be very impressive, but then further afield, I think we can expect more updates. And
you've done well not to mention it, but obviously Sigma is 70 k's up the road in the same state. They're going to be one of the largest spodumene producers commencing production just this month. So is there much synergies, do you think, from learning from their experiences?
Yeah, no, look, so for those that do not know who Sigma Lithium are, it's a NASDAQ and TSX listed company, and they have a market cap of over US $4 billion. And so the really attractive things for us about what they've achieved is that they're only located 40 kilometres away in Minas Gerais. They've just entered first production, and they're really doing something very similar to us. So DMS flow sheets, spodumene, and what they've achieved is just fantastic. So constructed their project in about 14 months, which compared to a lot of peers is excellent. Capital and operating costs, which they've put out in their studies, also very competitive in the market. And so what we've really done is really a factor of the great relationship that we have with their team. We're using a lot of their consultants, and we have a lot of support from people who've supported their project. So very much looking forward to emulating some of their success.
Thanks, James, and thanks, PAC Partners, for the invitation today. As James mentioned, I'm Tom Davidson, CEO of ACDC Metals. We're excited to be here today to talk about ACDC Metals owning listing in January this year. The standard disclaimer. So our strategic statement: building a mine-to-market critical minerals company and heavy mineral sand assets, a proprietary rare earth element processing technology, a secure supply of critical metals is essential for the energy transition. Through an innovative business model, ACDC can play a pivotal role. Our investment highlights the rare earth element extraction. So this is the process where we take a monazite concentrate and produce a mixed rare earth carbonate and separate byproducts. Our feedstock can either come from ACDC monazite from Western Victoria mineral sand assets or sourced externally. We refer to this process as MMP, the medallion monazite process, which is a caustic crack process. As the name refers to, this process is being developed by Vanadium Resources, a TSX listed company. ACDC has an exclusive agreement with Vanadium Resources to utilise the MMP in Eastern Australia, specifically New South Wales, Victoria, South Australia and Northern Territory. This is our differentiator and the first step of downstream value add. Our heavy mineral sands. We currently hold 5 tenements in Western Victoria, with a variability of both WIM and strandline mineralisations. Extensive drilling was conducted in the 80s and 90s by CRA, and our drilling program underway currently is going to allow us to validate and use this data to assist us in a JORC resource estimation. The nominated project will produce a heavy mineral concentrate, zircon, titania, and a rare earth concentrate, which will be the monazite and xanthine. The rare earth market is well documented. The outlook and the drivers for these rare earth projects. But to reiterate my view, I guess the 3 key points is the market growth. Signs still show significant growth for permanent magnets through to at least 2030. Secondly, China's dominance on the market from mining and all value add downstream processing, ranging from 60% to 90%. And thirdly, the markets, government, public are demanding the supply chain development on Australian shores. And that's why we think the MMP is a key cog in releasing the value add chain. Our work program. Our prospectus outline a drill program that would enable us to evaluate our projects and to enable our dual maiden resource and to support our metallurgical test work. We are over 75% through that program and drilling continues now at our Douglas project. We're also in discussions with key consultants to commence scoping studies for both the mineral sands plant and our rare earths plant. Our board and management team. We have assembled a strong team with rare earth experience, with project development experience, engineering, finance and geology. And we have all worked together as well previously, so that can only help the cause. Our corporate structure, I guess the two key points to make here is we have a strong cash position, recently going through our IPO over Christmas, and this will enable us to complete our planned work for this year and next. In the bottom right hand corner there, the peer benchmarking graph. This to me shows the upside for ACDC Metals. Noted that the others are further developed with their projects, but that's the aspiration. ACDC Metals strategy mine to magnet. So this is really our key slide that explains what we're all about. Key to note that both the mineral sands plant and the rare earth plant can be developed independently. This is mainly due to the optionality of feedstock to the MMP and also that all monazite is relatively similar. Based on the work done by Medallion, monazite across the world is reasonably consistent with only minor adjustments to the plant required. The left-hand side box represents our mineral sand assets in Western Victoria and the supply of monazite concentrate to the MMP and also the production of heavy mineral concentrate. Both products from the mineral sands plant can be exported to established markets. Heavy mineral concentrate being the zircon, titania, rutile, limonite, all well understood markets and demands. The rare earth concentrate, currently all this concentrate in the world is exported to Asia for separation and further downstream activities. The advantages of monazite concentrate. Once processed through the mineral sands plant, we are able to produce a concentrate that is rich in rare earths. Monazite concentrate is 1,000 times richer in rare earths than the clay-hosted projects. This enables the downstream plant to be significantly smaller than that of the mineral sands plant. So for example, if we had a 5 million tonne mineral sands plant, the concentrate produced would be between 7 and 10,000 tonnes. So the MMP footprint is a lot smaller, reduced capital, operating costs, and a minimal waste stream. The monazite concentrate can be supplied to the rare earth extraction plant either from ACDC or international domestic supply. The right-hand side box represents our rare earth extraction and the separation step producing individual rare earth oxides. For the location of the plant, it is likely that it will not be adjacent or within close vicinity to the mineral sands plant due to current Victorian legislation. As part of the process, we will handle radionuclides, like all rare earth projects, so it's likely that it will be in South Australia where there is favourable legislation. We have already done a site visit to Adelaide, met with key stakeholders, and have received only positive feedback. What is the MMP? So MMP is the Medallion monazite process. Medallion have spent the last 5 to 6 years developing this flow sheet with the Saskatchewan Research Council, so that's the ANSTO equivalent in Canada, and have a technically strong flow sheet. The flow sheet is based on the 1970 technology used at La Rochelle and subsequently in China. The main developments have been a continuous operation, enabling efficiency in energy and reagent consumption, and additional steps in processing to minimise the waste streams. They've also completed a concept study that was located in the US, and that'll be part of our activities now is to Australianise that concept study. Key to note that the downstream opportunities that this represents for Australia towards the production of magnets is enormous. Currently, all processing beyond mining is exported offshore, so the value-add opportunity is here. The REE opportunity. Firstly, market growth. So the NdPr supply and demand shows that we need to double our current production if we're to meet current forecasts. Secondly, the China's dominance. So on the right-hand side graph there, you can see once we get beyond mining, it's clearly dominated by the Chinese market. And the downstream processing represents a value capture opportunities. Over 85% of rare earth magnet value is in post-mining activities. So our mineral sands projects. Our mineral sands projects are all located in Western Victoria on the edge of the Murray Basin. Projects are all close to current or historic mineral sands operations. You might see a few familiar names on there. Clear access, wide roadside verges for low impact exploration. So getting into our tenements for this program has been relatively simple. Drill program progress to date. So at the Goshen Central project, we've completed over 140 holes to 7,000 metres in both discovery and infill drilling. Watcham project, over 3,500 metres of discovery drilling. And our Douglas project, which is underway right now, we've planned for 4,000 metres. That started last week. All samples to date have been delivered to the lab in Perth, and like everyone else, we're waiting for assays. Our work plan for 2023, with our initial phase of drilling near complete, our focus will move to the delivery of our maiden JORC resource. Concept studies are being discussed with respective consultants with the intent of starting this quarter. And then once we have both the JORC resource and concept studies of both our mineral sands plant and of our rare earth plant, we'll be able to get a really good view of what our company strategy is all about. Additionally, our focus is also on the further testing requirements to move into a PFS and beyond. That test work with ANSTO is critical and it doesn't take 2 seconds. So we're sorry, so just have to plan and prepare for generating that material so we can produce monazite concentrate to then allow them to do that test work. And in summary, so we have a strong team. There's cash in the bank to do our plan for the next 2 years. And in our short time of being in operations, we're delivering on what we said we'd do in our prospectus, and we remain on schedule. We're working in well-established areas. We're seeing minimal delays to activities, and the messaging of downstream value add is a good one and our differentiator. Thank you for your time and ongoing support.
First question.
Hi, just was hoping you could talk a little bit more about the Medallion licensing agreement. For example, like specifically the license in the future allow you to process outside of what you mine yourself?
Yes.
Okay, so is that something that...
Yeah, so when we say we can get it in externally, so yeah, either ACDC produces a concentrate to the MMP, or we can import, as long as it comes in through those geographical borders of South Australia and Victoria, then that's, yeah.
Thank you.
And do you want to just emphasise the importance, given you showed the bar charts, of how China dominates rare earth processing, and what we see in the news flow these days in the AFR and elsewhere? Like, how much inbound inquiry have you had about developing rare earths processing in the jurisdiction of Australia?
Yeah, so particularly when we met with the departments in South Australia, so everyone's all very excited about the sexy building magnets and so all that value add, and so I guess we're saying we're going to come in as those first two cogs, which will then open up that opportunity. So metallising, alloying, and then onto magnet manufacture. So that creates a big hub, revenues, opportunities for the whatever state I guess it's in. So yeah.
Tom, very quickly, each different deposits, they've got different expectations of monazite. Just wondering if you can comment that in terms of hierarchy of drill targets, but also that the NMP plant has a life of its own, regardless of the results.
Yeah, so I guess at the moment our focus has probably been on the Goshen Central project, which is a WIM style, and so I guess we know there's monazite there, but we haven't been able to quantify any of that yet. And I guess in those strand lines we typically have the coarser particles. I guess we still haven't got sort of full clarity around whether the monazite content there. And as far as, I think your second question was, what, developing the MMP separately?
Yes, it's an independent.
Yeah, I guess the factor, I guess, with the MMP is, I guess, it's just time. So no rare earth, if they were that easy, everyone would just go build them tomorrow. And so being able to get that test work going through the lab, pilot plants, and I guess it all takes money and time. So that's really the, I guess, the long game with MMP. The mineral sands plant is well tried and tested, and you've got VHM, Astron in the region. So it's not nothing new technology coming up there.
Some good presentations tonight. Good to see you. I was sitting there thinking, I was thinking to myself that I heard something really interesting, right, like a couple of months back, and it got me thinking about this. Now, I'd like to claim this for myself, but I can't, but I'll tell you. So what this person said, they framed the battery metals industry, the lithium industry, in terms of Kalgoorlie and the gold rush of the 1880s and 1890s, okay? And what they said was this industry today, it's 1890. What does that mean? It means we're 10 years in. You know, and I think when we look at some of the presentations we've seen here today and we look at some of the opportunities in front of us, there's a lot to be aspirational towards, particularly as a junior explorer like we are. But it tells me that there's a lot of, let me do this, there we go. It tells me that when we look at the macro, okay, when we look at the underinvestment in this space that we've seen over recent years, and we're looking at this demand, you know, this projected demand, and there was chat earlier on about the supply side, you know, just meeting that, you know, for the moment. But I think long term, when we look at that, okay, you know, we see that this opportunity presents itself. It's policy driven. We understand that. You know, governments around the world, you know, mandated change. They've got green energy targets, 2030, 2040, 2050. In Australia's case, 2070. Which demonstrates to me that this whole thematic is, there's longevity to it, there's depth to it, there's support to it, government support, not just our government, every government supporting this, okay? And there's opportunity there. So I think that's why we're all sitting here today, and you know, obviously we're still learning a lot about this sector and the lithium space and the battery space as a whole. But you know, that to me shows us that we're sort of like pioneers, right? You know, like in 100 years' time, maybe there's like some faded photo of all of us sitting around, right? But in the same, the digital photos fade, by the way. I don't know, but in the same way that those guys in Kalgoorlie didn't realise what it meant in 1880 or 1890, in the same way that those people of the Industrial Revolution didn't realise that their work would be having an effect 200 years later. So that got me thinking, and I really sort of like that, because I think anything we talk about, you know, investment opportunity wise, the work we're doing, it's great, right? You're doing drilling, you're doing this, you're doing that, fantastic. What's the relevance? What's the relevance to it? But principally, this thematic, I love the opportunity that we see. And talking of opportunity, why don't we talk about Liontown Minerals? A good segue. So we listed November last year. We raised $7 million. Our focus is our Dundas project, which is south of Kalgoorlie. Now, I'll just point you guys to our recently released corporate presentation, which was released last week. There's also a list of references in the back of this presentation for announcements, which we've put out over the past 3 or 4 months or so. But the Dundas region, you know, it really is emerging as this lithium and critical mineral super province, right? I mean, look at the people that are playing down there. I mean, you know, we've got Liontown. We saw a great presentation from those guys earlier. Okay, Kathleen Valley, fantastic, right? Great project. Don't discount Baldania, 15 million tonnes at 1%, okay? Our package, our southern package, surrounds Liontown's Baldania asset. We'll talk about that in a sec. And our northern tenements are just to the east of the Bald Hill lithium tantalum mine, which we know, of course, is producing, right? About 26, 27 million tonnes there. I think the region as a whole, when we did our IPO in November, I remember doing the roadshow, like whenever it was, September, October, coming to Sydney, seeing a lot of you good people as well, and it was explaining Dundas, you know, it was explaining the region. Where was it, you know? What was it? Was Dundas an animal? That might have been a question, I don't know. But, you know, I think what we've seen in this region in recent sort of months, you know, with the AEST takeover, the IGO, Tanshi takeover, MinRes obviously getting involved there as well. Liontown, of course, they're doing their drilling out there. I would probably expect a significant resource, increase there when they finish. MinRes to the north, of course, and MinRes getting involved in that AEST deal tells you that this region is in demand. Juniors, you look at Liontown Resources to the south of us, had a very good couple of months as well. So I think when we're talking about the thematic, and I'm talking about relevance, okay, strong asset base is key. Now we've got that, that's a good start, okay. Experienced team, I've heard a couple of the guys here say tonight, it's hard to find people in this space, in the lithium space. Of course it is, we're all still learning. It's hard to get experienced lithium geologists and professionals. Our exploration manager, Jared Woodland, he's got a lot of experience in the lithium space and also regionally in this area too. So I think that's that's a coup to have him on board. And of course, critical minerals. We've spoken about the thematic. I'd look at Australia. We produce 50% of the world's lithium. Okay, and then you look at Chile. The nationalisation of lithium assets there over the past month or so. It makes Australia appear to be the #1 jurisdiction to invest in this space. And for me, the Dundas region is one of the #1 postcodes to be exploring for lithium and critical minerals in this country. So to have assets down there, I think is a real coup for us. We did acquire those projects from FMG, the FMG, yes. They are a major shareholder of ours, so that's excellent. And it's very difficult, I guess, to get a foothold in Dundas. All this means nothing, right? You can talk about sentiment and thematic and all this sort of stuff, but you've got to have a growth strategy. You've got to have a plan. What are you going to do? Now, I guess any of you guys who know me from previous lives might know I'm quite aggressive in my approach to exploration and company development. We were on the ground day one after our IPO, okay? We completed a geophysics campaign across all our tenements, the southern tenements in the left-hand image here and the northern tenements in the right-hand image, identifying about 28 geophysics targets. We also completed a full soil sampling campaign across all tenements. Numerous lithium in soil anomalies identified, up to 35 kilometres square and up to 218 ppm Li. Okay. What's the relevance of that? So if you look at the background grades in the region, typically 50 to 60, in soil sampling is what you would see. So we've seen over 200, we've seen 150, well over 100. Multiple targets here. Again, great, fantastic. Good amount of work to be completed efficiently, effectively, in a fairly short space of time. The question everybody wants to know is, of course, when are we going to start drilling? So our first drill campaign will be in the first week of June, a few weeks' time, and it will focus. So that's a tenement to the south on the left-hand image. That's the focus of our first drilling. Okay. So that is sandwiched directly between Liontown's Buldania project and Lavoto's Merivale prospect, okay, to the south. So what we see there, we see lithologies and geologies continuing from Buldania down through our lease and down into Lavoto's lease. So there we've identified outcropping pegmatites and also in the southeast we've identified a lithium in soil anomaly, actually a lithium and rubidium in soil anomaly as well. So that's going to be the focus of our first drill campaign. Also on the left-hand image, the far eastern tenement there, 2,000, 8 square kilometre lithium in soil anomaly, up to 218 parts per million. And on the right-hand image there, that's our northern tenements. That's a 35 square kilometre anomaly, lithium in soil anomaly, up to about 150 ppm. So these are significant targets, guys, and these are significant areas, right? As a junior company, a company that is, we've got 5.2 million bucks in the bank. Our market cap is sub 10 million. I look at where we are located in this region, Dundas, great neighbours, lots happening. Obviously, the thematic is strong. We're drilling, in a matter of weeks. This is a catalyst for us as a business. You've heard me say that word before. It is potentially transformational. So, please put us on your watch list. Alex Beeks, Chief Executive Officer, Liontown Minerals. Thank you.
Your major shareholder, Fortescue Energy, are they escrowed for a certain period?
Yes, they are for 12 months. Yeah, correct.
12 months.
Yep.
And what do they hold? What do they hold?
3.4%.
I was going to say good afternoon, but it's now probably good evening, and I'm very cognizant of the fact that I'm one of the last blocks between an open bar, so I intend to just push through this with a little bit of pace. I think if I can talk, and thank you very much, Alex, I thought that was an enlightening way of thinking about where we are in the critical minerals, battery materials space. I think we all know why we're here, so we don't need to go through the disclaimer. So, if I can talk briefly about IEC, we're possibly the smallest ones presenting today, and thank you to Jane and David for the faith in bringing us along. We've got an EV of about $2.5–3 million. We're quite possibly, of the companies that are presented today, the oldest, which is a strange thing to think about, that we started our life as a company called Atomic Resources looking for uranium in Tanzania about 20 years ago. About a dozen years ago, the company transformed itself to a coal producer, buying some assets in Tanzania, and operated up until about 12 months ago, 18 months ago, as a coal producer out of Tanzania, largely due to some self-inflicted wounds. We didn't have a great relationship with the Tanzanian government, unlike other companies, and I'm pleased to see the progress that companies like BlackRock are making in that jurisdiction. It became apparent partly because the world was moving away from coal, and partly because of the troubles that we were having ourselves, that it was time to get out of coal and look at a new direction for the company. I joined as a director of the company about 2 years ago with the task of offloading the assets and moving the company in a new direction, and took over as managing director about 16 months ago. So we started a process of transitioning ourselves out of Africa. We don't have any problems with the African jurisdiction, just that it wasn't working for us any further, and we wanted to capitalise on what we strongly believed in, the thematic of moving into battery materials, and thought that our opportunities would be greater in Australia, and certainly we have some long-standing shareholders who are pushing us in that direction. We've transitioned the company, we've restructured the company, we've moved down from a board of 5 to 3, and we acquired an asset in Western Australia at a place called Yalgara, which we think has a strong opportunity for nickel and copper. We liked this opportunity, came to us through some geologists that we had a long-standing relationship with, and they've retained 30% of the project. I'm not a geologist, I can't offer you a technical explanation or technical thoughts about that, but we did like it because, amongst other things, the area was completely unexplored. Not underexplored, but unexplored. So we liked the challenge of going into an area that we thought was relatively new. The geologists liked it because they thought that the geology was very similar to Chalice's Julimar project, and they'd been looking for some people to back them, and we happened to come along at the right time. So we've made a strategic transition out of fossil fuels into battery materials. Now we have a vision to become a leader in this sector. And this is our flagship project. It's 125 kilometres east of Kalbarri in Western Australia. We own 70% of it, and the licence was pegged by Azure Minerals, who retain an active 30%. So we had anticipated getting onto the ground earlier. Unfortunately, with the restrictions of COVID, we all remember that, and West Australia being shut to us from the outside last year, we weren't able to get on until July, August. We have completed our ground and aerial truthing of the matter, and we have now zeroed in on an area in the northern block. I must say that the block that we have, the licence that we have, is 2 blocks. It's approximately 400 square kilometres and some reasonably dense ground scrub, so it does take some. Most importantly, we did find some lithium, but again, that's not going to be the focus of the company. The focus of the company is this target, which we've identified as calling Yallalong South. We found a number of compelling conductors, and overlaid with some soil and rock chips, we think that there's a strong possibility for there to be quite a long copper nickel sulfide resource there. So the next steps for us there are that in the next 4 weeks we'll be running some ground loop over that and looking to identify some drill targets and be drilling subject to the usual heritage surveys and environmental surveys. We intend to be drilling that in August, September this year once we've further identified those targets. So in summary, we've transitioned out of fossil fuels, thankfully, and we're moving into battery materials. We think that Yalgara will provide us with a strong copper nickel opportunity. There's an aggressive exploration program targeted, recommencing over the next couple of months, as I said, with some ground EM being run and then identifying the drill targets and then hitting them with the old truth stick, as people like to say, putting some holes into the ground in the next 3 or 4 months. So in a nutshell, we've transformed, we've transitioned, and we're realigning ourselves with where the world is at, and I'm happy to take any questions people might have at this point in time.
Why was it underexplored or unexplored? What was
Yeah, really good question.
down there was it like a yeti or something?
Yeah, I think that there was probably something hiding in a billabong up there, but maybe a bunyip. But no, I can't answer that. And I think that we looked at a lot of projects trying to identify what our next steps would be, and that this attracted us, the fact that there hadn't been any work. There is a lot of work now being done in that area, that there's a number of people. There's S2 were active until recent. Todd River are drilling on our southern boundary. AQR is there. So there's quite a bit of exploration. Chalice have picked up some land that's on our eastern boundaries. So I think that people had just overlooked it or hadn't decided to go that far at that point in time.
You had mentioned that getting to the property can be difficult because of the shrubbery. If you could just potentially comment on the infrastructure. It does sound like you're saying that there's a lot more built up of miners there, so can you just talk about what would be required from that perspective on ground? Yeah, there's some ground scrub which makes it interesting in terms of our field work, our soil sampling. We did about just under 4,000 samples across the 2 blocks in quite long lines, and they were about 400 to 600 metres spaced apart. So just in terms of actually physically moving along, but there are a number of stations which we're working with, and in terms of getting around that area, there are basic tracks which we can get along. So we haven't had too much trouble getting in. It was just a problem for the geologists when they were doing the work, and they ended up, I think they were initially looking at using quad bikes to go from point to point and weren't able to do that, and they ended up having to pull a wheelbarrow along, which I'm thankful that it wasn't me doing it. So you think that you have solved the issue necessarily?
I don't think the ground scrub's going to be a problem with us doing further exploration or ultimately drilling.
Yeah, my name's John Siganek. We've got the Steelport Vanadium project in the Bushveld region in northern South Africa. It's one of the world's largest and highest grade vanadium deposits. DFS, we completed that in October last year for the first 25 years of our deposit. Gives us about US $0.9 billion NPV for our 74% share. Last week we announced that that's going to be increasing to 86% share in the next month or two, which will take us over $1 billion NPV. It's outcropping, easy to access, open cut mining, low strip ratio, low operating costs. We're using conventional crushing and salt roast leach processing methods, which which is an existing method that's used in the bushfield region. We'll be producing vanadium pentoxide of about 10.7%, 10.7 thousand tonnes per annum, and doubling that in year 4 once we're in production. We've got our mining licenses been granted. We're in the bushfield, which is established mining and smelting operation jurisdiction. There's about 30 to 35 mining and smelting operations in the area. And because of that, it's a major industrial hub. We've got mining, smelting, power, water, access to individuals, access to vanadium expertise, which is key here. We've got an experienced team who are currently in the recruitment process for developing our construction team. Our market cap's low, it's $40 million, and the focus in the next few months is really bridging that gap, implementing our financing plan. We're in detailed discussions with debt financiers at the moment. We've got several term sheets across a range of different debt funding options. We'll be announcing offtake in the next few months and securing strategic investors as well. Vanadium, there's two main areas, and steel and alloys represents about 90% of the production of vanadium, and that's pretty much how our phase 1 project would be based on. And in terms of getting this banked, it's around steel producers and getting that up to speed. We're getting good traction with steel producers with the vanadium pentoxide, so that's our phase 1 project. Vanadium redox flow battery, for me, this is one of the exciting areas and one of the reasons why I've taken on the role. VRFBs, a good example is the 100 megawatt VRFB battery in Dalian in China. They commissioned and operating that since October last year. They're in the process of doubling capacity up to 200 megawatts. The key there is it's grid scale. It's a potential displacement of coal-fired and gas-fired power stations with using renewable energy. And it's got the capability to do that, being a vanadium redox flow battery. The key point in this diagram is the circle in the middle. 90% represents the steel market. VRFB is about currently 6 to 7%, and the aerospace for the pentoxide 2 to 3%. The key here is the equity upside from my perspective in terms of once we're in production. 15 to 20% of the market will constitute production for vanadium for VRFBs. Some of the key metrics from our DFS in October last year, I won't go through each of them other than that they are very strong. We've got a low capex of $211 US, and that's just to produce a vanadium pentoxide. Our peers in the bushfield produce vanadium trioxide, ilmenite, ferrovanadium, and a suite of other products. And that's basically the building block of all vanadium type deposits. The reason why we've built just that facility is because our market cap's so low. So once we're in production, we'll expand. We're in the lowest quartile with $3.24. It's being well received from the banks because of that. Our DFS was based off $9.50 a pound. It was recently about $11. It's currently trading at about $9.50, $9. For me, this is a key slide technically in terms of getting it banked. We're in the bushfield. It's in the northern part of South Africa. It's been a major mining and smelting hub for decades and will continue to be that going forward. Platinum, chrome, and vanadium, importantly from my perspective, it's been a major production hub for vanadium historically. And because we're in the bushfield, we've got access to infrastructure. In terms of the project itself, that red box where it's got the mine site, that's basically our DFS, our 25 years. The blue area around that represents the rest of our resource. It's about a 180-year mine life at least at the moment. We'll be looking to haul the concentrate across to the SRL plant, the salt roast leach site, and we're looking to put an overland rope conveyor. Basically, it's a ski lift with a hopper, and that'll remove the need to transport concentrate through the community and out through the road, and it'll be electrified. And what we're doing on both sites is we're implementing solar and vanadium redox flow battery on the concentrate side, just big enough as a reserve for Eskom. There are issues with Eskom, and that's the reason why we're implementing that. And our partner on that, we've got the industrial park. They're building a 35 megawatt solar facility earmarked for us. We only need 13 megawatt of that. So it's plenty of excess capacity, and more importantly, it's a major mitigant for Eskom power. I won't spend too much time on this, other than it's big, it's flat, it's outcropping, and we're only mining for the DFS about 12% of that, so we've got lots of upside and optionality. Won't go into detail here, other than it's used in the bushfield. It's been used in the bushfield. The flow sheet here on the concentrator and the SRL plant, techniques that are proven. And in terms of getting banks across the line, I think this is bankable technically. In terms of, we're running several processes. At the moment, we're in discussions with debt financiers. We've got an advisor out of London. We've got several term sheets covering a range of different types of debt financing, from export credit agency, conventional project financings, PE funds to Nordic bonds. So we are exploring all the options. What's one of the requirements here is long-term offtake, and we're talking to a series of strategic investors in offtake. We've been running that process for a few months since my appointment in January this year. One of the first cabs off the rank is Matrix Resources. They're looking to secure 20%. We've got an MOU with them, and also another 20% as a sales agency. They've invested 10% of the company at a 40% premium. It's still only an MOU, but they're keen to convert that into an offtake. And there'll be more of these types of announcements coming through in the next few months. For me, this is critical for getting the debt, and I believe that we'll get there. Timeline, we completed the DFS prior in October last year. We'll be well down the path on approvals with water environmental authorisations, probably by about Q3. The other work streams are, there's a lot of technical work there. We are re-evaluating some parts of the project. Technically, we've recruited a general manager out of the Burley Minerals Vanadium operation, so we try to incorporate that. We're planning for FID by the end of the year. That is a stretch target. There is still a lot of technical work that we need to do. In parallel, we're running the offtake and the debt processes that I highlighted earlier. If we do get there by the end of the year, from a technical point of view, we'll have debt financing options available at that time. If it takes us longer, then we'll gravitate from the more expensive debt into ECA or project financing debt. And in terms of wrapping up, there's some of the key catalysts for this project is the offtake. That's the key for unlocking value. It also gives third-party validation. That's just due diligence underway. Also on the third-party validation is the technical DD that'll be coming on the debt financing. Term sheets are indicating about 65% gearing. Theoretically, the banks are saying we can give you more debt. I'm an ex-banker. I'm not going to let this go over 65%. And then that'll give us our phase one. So that'll be basically off the back of steel manufacturing and offtake for that purpose. Once we've got that built, we'll then be ready. And once the vanadium redox flow battery, I think it's a wave that's coming. I think it will be a game changer globally in terms of displacing coal-fired power stations and gas-fired power stations. So from my perspective, that's the key, getting to stage 2. We've got a lot of optionality. Our resource is massive, so we're looking at a range of different feasibility options around that, selling our concentrate, selling ferrovanadium. Do we just make this bigger? Do we go, currently our base case is 1.5 million tonnes per annum. We can go to 3.5, we can go to 5 and 10 million tonnes per annum. Or should we go add more products into our suite of production? We can do that, which is what, and these are the other metals that the Bushfield operator is currently doing. And then we're also having discussions with potential battery manufacturers, solar manufacturers, and potentially exploring building an electrolyte facility right next door in Steelport, or a solar facility. And in South Africa, we're getting a lot of inbound interest from South African companies, South African solar generators looking for VRFB. But my job is to get phase 1 built first. That's it, basically. Yeah. And thanks for sitting out for the last meeting.
John, thank you, Ron. We've spoken in the past, and I've looked at quite a few vanadium projects around the world, and I look at this, it's got great. It's got fantastic access in terms of the ore body and mineability, using conventional type of recovery techniques to get your product. Just one of the options that you've got for the product and further downstream processing at stage 2. But when you come to look at the talking to financiers, somebody, what's the element that's maybe they're looking for, the hurdle for you to jump, for them to go, yep, we're signed up?
Offtake.
It's all about it.
Technically, it's bankable, it's proven. Commercially, I think it's in a major jurisdiction, so we've got a lot of mitigants associated with that, having the infrastructure. Power is one of the things that resonates. That's an issue in South Africa. Everyone on the planet knows that there's issues with power, and that's one of the reasons why we're building our own solar facility and VRFB battery, and we're partnering up with another company to do a solar facility. So with that and feeding that information to the banks, that's resonating with them, but it's the offtake, just making sure that the volume's protected. Vanadium price fluctuates, and so and on that point, what we've done with the MOU that we just announced is a 10-year offtake with a floor price mechanism, and we'll be doing with basically this term sheet that we've negotiated with it's a nickel producer, by the way, is a floor price mechanism. So and we're doing that with each of the groups. There's another group out of Europe, which is a steel producer, trader, and also out of North America and Europe. So I'm looking to bring in about 3 off-takers, and that gives the equity markets third-party validation, gives the equity market some comfort that we've got some support in South Africa. And the other one is out of South Africa itself. Some of the debt financiers there are keen for us to develop the ability to produce vanadium pentoxide in country, and to address the power issue.
It does seem like a very interesting project, and the Chinese invested at 11 cents. I think one of your contractors invested at 10.5 cents, and your price is now 8 cents, or a bit more than 8. Is that because you need to formalise these offtakes, the political instability in South Africa, and then the power issues that you talk about? How much is the political instability in South Africa?
I think outside of Africa, particularly US and probably particularly out of Australia and London in particular, there's quite a negative perception around South Africa. So that's probably one of the bridges that investors need to get their head around in terms of political risk in South Africa. So that's probably the main roadblock with our market cap at the moment. I think as we start delivering into our offtake, and debt financing, I think some of that scepticism about building a project in South Africa is going to go away. The fact that we got Rabex in there for 60% premium, they wanted to have a seat at the table with the offtake, so that's the key there. Matrix, 40% premium as well with the investment was around getting the offtake. They want the offtake. The other groups, we're having the same discussions there. It's really around, we want the product, and I'm saying you're not getting the product unless you give us a premium to where we are. And we don't want to dilute at these levels, so we've got lots of avenues with off-takers and strategic investors that we're running in parallel at the moment. So that's the reason why we're getting premiums with those types of strategics.
And with your financing, are they going to come from South African banks? Because
we've cast the net out to about 25 banks, globally. Anybody that I've ever dealt with, so there are South African banks. There's I won't names, but there's a few there that are running the ruler across us. We've got term sheets from one particular bank that's going to put in debt and equity. Majority of the funding that we're getting interest out of is out of Europe, North America, and then the PE funds, they're global. So there's groups in South Africa, North America, Europe, and also Nordic bonds. We're talking to potential Nordic bond investors there as well. So just to finish that, we have got a range of funding options. It's not like we've got one or none. We've got several. Do we go more expensive and get this done quickly? My point earlier that if we're ready for FID by the end of the year, we can go down the PE route or a Nordic bond route. If it's going to take longer, we'll go down and get a South African bank, project financing, ECA, Export Credit Agency funding, which is significantly cheaper, but will take longer and a lot more due diligence.
Thank you for the presentation. Good luck with the project.
Thank you.
I just was trying to broaden my understanding because from what I've seen, there's quite aggressive forecast growth rates of the batteries are mentioned by the redox vanadium batteries, which is great news. But how does that compare with some larger scale batteries, say the sodium alumina or the existing lithium batteries? What are the advantages of, say, the redox batteries?
Some of the headline aspects with sodium, I think that's got a long way to go still. I think it's probably where vanadium redox flow battery was 10 to 20 years ago. On the lithium hydroxide, the headline number, it is cheaper in terms of operating costs, but the advantages here with VRFBs is that it can go for 20 years. At the end of 20 years, you take the electrolyte out of the battery and put into a new battery, and then you go for another 20 years. So that's not really coming out in the operating cost aspect. And I think some of those metrics will start to become more prominent with those facilities in China in particular that are at the grid scale capacity, where we'll start to see some more numbers around the operating costs, the capex costs, how do they compare to lithium hydroxide. It's also the safety aspect and some of the lithium hydroxide plants, the bigger ones, they can overheat. That's a common issue. We don't have that with VRFBs at all. So I think the proof's in the pudding in the next 12 to 24 months, once some of these larger scale facilities have been running for a period. In terms of banking that type of project, it's too early. I think banking this project around steel and alloy is the way to go here. And by the time we're in production, there'll be at least 2 or 3 years of data, that's new data around operating costs particular, does this make sense or not? And then if it does, we're in the box seat.